Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, and it is Saturday, February 6th, about 2:15. Looking at a chart of the S&P 500, and you can see from the chart we had another down week, and we're in a place where the market could go either way. I know I've said that before, but we've got kind of a double bottom down here. Had the market made a lower low here, then, potentially that would continue on down into this area. But from here, we could get a little bounce to a slightly higher high up in this area, and then have the market make its way down into the 1775 area. Either way, it's going into this area. So I wouldn't make too much of a run here, a little run up here, just because it could go make a slightly higher high and then just roll back over. Let's look at. I'm gonna go kind of fast today. Got to take my son to a band event, so I'm going to go a little bit fast. Here's the 10-year Treasury yield, and this, hold on a second. I had this line back here at 1.8%, and you can see this past week we pulled right into it and bounced. We could actually go down a little further, and you've seen this before, where the market kind of does one of these and tests, the lower channel or the upper channel line, and then bounce. And we could have that, or this could be the low. This 1.8 is the midpoint of this big candle off the bottom here. That's why I drew that 1.8 there. Is a lot of times the midpoint of a large range move will end up being support or resistance for the market. So that's why I drew that there. But I don't know. The Fed is they want the banks to stress test around negative rates, and I'm not sure they can pull that off. We'll see. Certainly, they won't be pulling it off for any length of time. It could be something that happens very, very short term, and then bounces out of it. I for one am not leaving my money in the bank at negative interest rates. I'm not going to pay the bank to hold my money, and I have a feeling that a lot of other people are the same way. Here's the VIX, the volatility index, and you can see the VIX rose a little bit, then pulled back. Obviously, if the market sells off next week, we're going to see the VIX rise a little higher. And it might get up into this 3750 area. I don't think it'll take out the high here, because these last waves down are usually not as strong as the middle wave. So just so you know what I'm talking about, this is if you look at this, there's a move down here. Hold on, let me zoom in. Let's see, which one do I want to do here? Well, it's not going to line up quite right like I thought, but the high in the VIX was created by this. And you can kind of see there's a move down, and then there's this move back up, and then there's this move down. And that's what I mean by the middle wave. Let me draw that again. Let me draw it over here a little bit. And then notice we came up to here, and then we made this other wave down. This is the fifth wave. So then you have the same thing over here, right? You've got down, up, down, up, and then down. And what I'm saying is this wave right here is usually not as strong. I can't. Somehow my pointer thing is messed up, but it's usually not as strong. This wave down into this area is not as strong as this one. So that's why I don't think the VIX will make new highs, but it could make new highs. All these other markets look more or less the same. If you look at Germany, Germany looks very similar to ours. It looks like it wants to make a lower low and then bounce. If you look at Japan, Japan looks like it wants to make a lower low and then bounce. If you look at the United Kingdom looks like it could go either way, but it could, since this wave here looks one continuous wave without much of a pivot, it looks also like it wants to go lower and then bounce. So all the markets are kind of moving together. If you look at some of the secondary markets, they look equally weak. You can look at the Wilshire. That's the Wilshire. Let's look at the Russell. That's the Russell. Looks pretty darn weak. Looks like it wants to make a lower low. And then let's go back and look at Japan and zoom in. Looks very similar to the Russell. Looks like it wants to come down here and make a lower low. Germany. The only thing I'm doing different is I'm zooming in so you can see better. It wants to make a lower low here. So I would say, anytime you have all these major markets moving together, that tells me that this is not a money rotation event. In other words, sometimes money will flow out of one market into another market, in order to chase a return. It looks like here money is not flowing to any particular market. It's staying in the markets it's in. It could be flowing, but they're all moving in the same direction, so that if there are money flows, it's not causing a lift in any market anywhere. So, which tells me that this is going to be pretty much a global sell-off. All the markets are going to go down together. Now, if you look at Shanghai, and I don't have Shanghai, it's gone down quite a bit already. And there's a couple other countries that have gone down quite a bit too. But I'm looking at like the major markets, right? Germany, Japan, the UK. These are this is where all the money in the world is located. So let's look at gold real quick. So here's the big picture in gold, and you can see I've got this longer term, box drawn down here, and then the other interesting thing I think on the chart is this red line that I've got drawn right here, which comprises of this low. It's comprised of this low, this congestion area, and then the market broke down through it. Let's just look at that real quick. The market broke down. Okay, so we were talking about gold, and I don't know why that's doing that, but let's see if I can get it to stop. No. Okay, so gold might kind of work its way back down to this double line here and then take off. If you look at the bigger chart, you've got these extremes here in the market, so you could see gold maybe go all the way back up into this area around 1500. But ultimately, I'm looking for gold to roll back over and go lower down here below 675. So if you look at the dollar looks like maybe it might be in some sort of a more complex looking correction. Maybe something that looks like this, where you get maybe a triangle or something going on here. In which case, it's going to bounce around in here a little longer before it takes off to the upside. But just like gold, these markets are all the same. The major pivot is back here. So we're looking at a support box up in this area for the dollar to come into this area above 102.50. And then we're going to have a pretty significant correction in the dollar, which should, another thing, gold, because gold looks like it might pull back a little bit, you might have the dollar. You might have the dollar just race right up into this area, and then when it pulls back, then gold takes off. So they're somewhat inverse, but gold is also influenced by other nations' currencies, so you can't look at it just as a function of the dollar. But see, what else is there that we want to look at? Crude oil. Let me show you something on NinjaTrader about crude oil, because this is a bigger picture. So you can see here we have a weekly chart, and you can see that crude oil looks like it's at the end of a trend. So this very much looks like a bottoming pattern. And of course we have the decision point here. So we could see crude oil pop up into this area around $55. But ultimately we're looking for crude oil, and I'll go back to this other drawing. Looking for crude oil to probably come down ultimately to this purple line here off of this major pivot, which is around $16. So unfortunately we've got maybe a little bit more selling to do in crude oil, but there might be a short-term bounce up into this pivot extreme right here, around, can't really tell what that is. Looking at this pivot extreme right here. So you could see oil move up, and maybe this box is a little bit too high. Maybe get a rally in oil up into the mid 50s area, and then roll over and start heading toward that $16 area. I don't know. That's kind of what I see in the market right now. I think we could have a rally next week within a rollover the following week, or the market could just continue to go lower and take out the previous low, and then we'll have a strong rally. So that's kind of what I see this week and the next week or two or three coming up. And if anybody has any comments or they want to take issue with any of those, feel free to make some comments in the comments section. But the market is definitely, all these major markets are moving together, and we're definitely at the very beginning of some sort of global event. I mean, the NASDAQ is it looks fairly weak. Looks like it wants to make a new low right down here, and then probably bounce. So just keep your eyes and ears open. Be thinking about what you're going to do if it gets to a certain area. Again, I think the perfect place to probably take action is wait for a new low. You're going to get a really strong rally back to about there, and then a little bit of a pullback, and then another really strong rally up into this area on the NASDAQ. Notice the big gap right here. I would look for that gap to be filled, and then, big time down after that. So same thing in the S&P 500. I think this gap on the S&P 500 is around 2045. And I wouldn't push it too hard. I mean, it could go to 2060, but I wouldn't push it too hard because this move should be pretty rapid. So anyway, that's it for this week, everybody, for the Middle Class Investor. Thank you for coming in. You can follow me on Twitter @InvestorClass, and feel free to comment here in the YouTube channel, and I will respond accordingly. All right, everybody. Thanks a lot, and we'll see you next week. Take care. Bye-bye.